Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here with our host, Robb Fahrion. He's the CEO and founder of Flying V, our digital marketing partner. He's just back from Mexico. Rob, how was your trip?
It was very hot. Got a nice bright red face now for the show. What do they say? A face made for radio, I think right now is what they might be saying. So hopefully the DKI critics won't be going too hard on us this week. But yeah, had a great time and back made it. Everybody's good. So
Yeah. Well,
looking forward to
i
getting back in the swing of things.
if anybody's watching the show to see pretty people there, just in the wrong place, go to somebody's Instagram. There are pictures of people's butts there. That's all
There
I
you
know
go.
from Instagram.
There you go. This week, Gary, got a great issue. We're calling it the uranium market is out of balance. If you know and have been following DKI for some time, Gary, pretty bullish on uranium. We'll talk a little bit about this. One thing to note as well, we did release our new report last week. We've been talking about that quite a bit on the last couple weeks show. Again, if you're not a premium subscriber, you're not going to have access to that report, but you very easily could. And we think this is a big one. We like the company. Gary, anything else to say about that?
Yeah, since we put the idea on the DKI blog on the current recommended list, the stock is up just under 15%. So people have done really well in a matter of just a few weeks. If you're listening to this and that sounds interesting to you, you did not miss it. I think this is a name where you make three, four, 5 times your money over the next few years. So, whether you pay the price that we did or you pay up another 14, 15%, it won't really matter if this is a triple or quadruple or quintuple. We'll all still do really well together.
Great. Gary, let's get into it. We're going to talk uranium, as we mentioned. We're talking about the jobs revisions, which was a big one. We knew this was coming. We're deep diving into that. We're talking some price controls, big buzzword in the market, as well as just over the course of political communications with the elections coming up. We're talking about the Fed once again, and we've got Target making appearance today in this week's five things. You ready to lock and load? Ready to go, Gary?
Oh no, Rob, now we need a trigger warning.
Thing number one, Gary. We're talking about the world's largest uranium producer. They made some production cuts into increasing demand. Thing number one, Gary, the world's largest uranium producer cuts their production.
All right, Rob, there's a mispronunciation warning coming. The world's largest uranium producer, there's 100% probability I mispronounce the word. I think it is pronounced Kazatomprom.
That's
Uh,
how I would have guessed. And I was definitely leaving that one for you
yeah,
without saying anything within the intro.
for those of you more familiar with Eastern European languages, put how to pronounce it in the comments. We'll appreciate the help. Anyway, DKI started buying uranium in 2021 because we thought energy, also with gold and Bitcoin, all good ways to hedge against inflation that we saw coming, that we thought was going to be significant. We paid about half the current price. Um, what happened earlier this year is Cameco, the big Canadian producer, came out and they said that they were not going to produce enough uranium. Again, this is multiple years in a row. They were not going to produce enough uranium to satisfy their contracts. And the contracts they have are actually below the current market price. And so Cameco is flat out saying we will lose money on incremental production. We would rather do that than increase production. And that's pretty interesting. So last week, we got the announcement from, we'll just say the world's largest uranium producer, because I'm not going to mispronounce the name twice. Um, but these guys came out a while back and they increased their production estimate. And then after that, they came out and they announced that they were going to increase it again. So they increased production estimates twice. Well, guess what? Last week, the key takeaway from the press release was the announcement of a reduction in planned uranium production. They went the exact opposite direction. They were expecting, this is at the high end, 31,500 tons. They're now down to 26,500. Now, the key thing here, is uranium supply is not going to be going up, but demand is not going down. Rob, there's only one thing that can adjust there. What do you think it is?
I think it's going to be the price,
It's
Gary.
it's going to be the price. Exactly. So the key thing here is Kazatomprom, again, maybe
I got you.
mispronouncing. I'm just going to stop saying it. Um, not only is it hard to increase mine production, a key thing is everybody's having difficulty getting supply of sulfuric acid. The reason that matters is it's crucial for the uranium extraction process. So you take the basically a lot out of the ground, and to distill it down into pure uranium, you need sulfuric acid. So if these companies can't get it, they're decreasing production estimates, and that doesn't change the required supply, the required demand rather. So it's a situation where supply isn't going up, but demand is.
Gary, you've been bullish on this for years, as you mentioned. You consistently do advise though owning physical uranium to the miners. Can you talk a little bit more about that, and then maybe even what some of those positions are that you're keen on?
Yeah, we get this question a lot when people find out I own the physical uranium. One of the best ways to do it is through the Sprott Trust. The ticker there is SRUUF. Um, and they say, wait a minute, if the price of uranium is going to go up, won't you get more leverage? Won't you get better returns out of the miners? And that is often technically true. The reason is these companies, they're leveraged to this price. And so if the price of if the price of gold goes up, the earnings of gold miners will go up more. If the price of uranium goes up, the price of uranium miners and producers will often go up more. And so they said, wait, if this is your thesis, why don't you own the operating companies, the miners? And it's a great question. And the reason I don't is because then you're taking on operating risk. And so you have to deal with management teams. You have to deal with estimates of like grade. How much stuff do they have underground, whether it's the gold miners or the uranium miners? Do they understand how much they have underground? Is the management team good? Do they have labor contract issues? One of the reasons we haven't seen the huge run up in gold mining companies that we have in gold is because labor costs have gone through the roof, right? They have to deal with unions. There are permitting issues. And in this case, even though more and more nuclear plants are being built, and the existing nuclear plants, many of them, their useful lives are being extended, meaning we have increasing demand for uranium. But here's a situation where these companies can't get supply of sulfuric acid. So great, go produce more. And they're actually producing less. And so, when we look at companies like the world's largest uranium miner, and they say we can't get what we need to produce more, we're going to produce less. Or you look at Cameco, and they tell you, yeah, we're not going to increase mining capacity. We're going to lose money satisfying our existing contracts. That's the exposure I don't want. Now, there are people who are really smart um, mining investors, and they know these management teams, and they know the labor issues, and they know the permitting issues, and they're great at that, and I'm sure they'll do really well. This is a situation where I have a very clear thesis on uranium supply and demand. Demand is going up and will go up before supply does. At some point supply will adjust, but not fast enough. And so I want the pure play bet. That's why I'm playing the physical. Nothing against the people who like the miners. Just for me, this is the cleanest way to do it. And results like we saw last week are a perfect example of why I'm invested the way I am on this.
Gary, we're going to shift to job revisions. You have the exact number, but it's a big one, over 800,000. We've obviously talked ad nauseum about government reporting numbers, as well as a weak private economy. Thing number two, Gary, DKI warned about job revisions. They are huge.
Yeah, this is enormous. So one thing that's been a constant theme here on the five things is we've talked a lot about the unreliability of the employment data. And I use the word data very loosely. The pattern we've seen, and by the way, intern Andrew Brown has done a great job putting together charts on this. We've put charts on this before. But the thing that we've tracked is typically in a given month, every month, these employment numbers are reported. And the numbers are usually fantastic, and they're used by people in Washington, people in the White House, and the administration to talk about how amazing the economy is. Oh my God, we have a fantastic economy. Look at all these new jobs. And it grabs headlines. But then what we find is a month later, there's a revision. And that first revision, the employment numbers are almost always revised down. And a month after that, we get a second revision. And that second revision, guess what? They're almost always revised down. And it's gotten to the point where the revisions are so consistent in one direction, always down, and so large that the employment data is no longer useful. And that's why, I mean, I told you that's why we've stopped reporting on it. That's why we've stopped covering it. People act like there's data, there's something to interpret, but the numbers are just nonsense and they're made up and they're going to be revised by so much. It's all ridiculous. So we got a report last week. This was expected. A lot of credit to Michael Shedlock, Mish, economist on the DKI Board of Advisors. He nailed this revision. But for the 12 months ending March of 2024, the employment numbers were revised down by 818,000 jobs, almost a million jobs. That is enormous. It wiped out somewhere in the neighborhood of, I think, like a third of all the job additions over the prior year, and basically blew apart all of the job announcement beats over expectations. So, as an example, if people were expecting an increase of 200,000 jobs, and we got 250,000 jobs. People said, "Oh my God, this is amazing! Look, what a great economy you have!" And the White House would be crowing, and Congress would be saying, "Look, we have this terrific economy. Everything's in great shape." And we beat expectations by 50,000 jobs. And the next month, we beat expectations by 25,000 jobs, and on and on. If you add up all of the beats that they had, they were all wiped out and more by a huge margin. Revising these employment numbers down by 818,000 jobs means that for that entire year, every time they told you we added more jobs than people were expecting, that wasn't true. They added fewer jobs than what people were expecting.
Gary, one of the things I found interesting amidst the obviously mess that is the 818,000 jobs that were revised down, we saw government jobs were actually revised up the other way. What do we make of that?
Yeah, this is one of my great frustrations. We've talked a lot about a bifurcated economy where we just have massive amounts of government spending and stimulus that makes the aggregate numbers look good. And we've talked a lot about how the average American is not doing well. People's earnings have not kept up with inflation. So many people are struggling to pay their car bills, their credit card bills, the food bills, everything has just gotten really expensive. We talk about food a lot, but when people have difficulty paying for it, that's scary. That's not a sign that we're in a great place. I saw something earlier today, something like 11% of all credit card bills are more than 90 days past due. I mean, these are just enormous numbers. And so, when we talk about this bifurcated economy, one of the things that we talk about a lot is the difference between what the average American is experiencing, which is not great, and what the government is experiencing, which is just massive amounts of spending. And so, that 818,000 jobs, those all came out of the private sector. And that's the sector of the economy where people produce things, where they produce value. It turns out they had to adjust government jobs up, that there were more people in government jobs than they'd even counted before. That's where all of the growth has been. And the thing that should scare people is government jobs are not productive. The government doesn't produce things. They take from people who produce and they redistribute that. Now, if you're watching this and you want to make the argument, yeah, but that's really a good thing. All right, fine. Go ahead, put that in the comments. You're entitled to your point of view on policy, but that doesn't change the fact that it is taking from productive people and redistributing it. So if you think that's a good thing, that's fine. You can think that. But what we're seeing is just an increasing shift in value and economic power and economic spending from the productive sector of the economy to the unproductive sector of the economy. And we just saw that in spades in these employment numbers.
Great insight there, Gary. And as always, we'll keep eyes on any of these reports and be calling them out with skepticism that I think we've hit like 100%. I feel our
Yeah.
rate on knowing that they're going to revise down it seems just to be a certain thing. I wish I could bet on it.
Yeah, it's amazing, Rob. There are times that people criticize me for being, pessimistic or critical. I'm like, but if I'm right, then I'm realistic, right? If
Right.
I keep saying things are bad, and then the data comes out good, then I was too pessimistic and wrong. But if we're saying, look, this is a problem, and then the data supports that, I'm not too pessimistic. We were correct. And in
Yeah,
this case, we
realist.
have been.
Realist. Thing
Yeah.
number three, Gary, we're talking about politicians now. You're hearing suggestions about price control. You're talking about shortages, asset confiscation, unrealized capital gains taxes for the ultra wealthy. Thing number three, Gary, tell us more about it. An economic plan to create Venezuela, part two.
Yeah,
Strong.
so we're in the political silly season right now. And first of all, let's just be clear. Um, Almost everybody in Washington, D.C., both parties, is economically illiterate. These people do not know how an economy works. They don't know how a budget works. They can't figure out value, and that is a bipartisan problem. Um, that said, we're sort of in this nutty, silly season where political candidates just sort of throw out these ideas. And, because, one candidate is generally speaks off the cuff and, will make it up as he goes along. And the other one is refusing to do any interviews and won't answer questions on anything or face, even fawning reporters. Nobody actually has to provide detail. In this case, we're looking at a really dangerous potential precedent here. One of the ideas being kicked around is taxing unrealized gains. And, I get it. I understand. It's very easy to say, yeah, but, it's only wealthy people who have, unrealized gains and, we should get them. And, other people will say, well, that policy only applies to people who have a net worth exceeding $100 million and who cares about those people. And we should just grab their wealth and redistribute it. Okay. Let's talk about the implications of that. We're going to go back to the 1960s, and we ended up with a policy um, basically to capture value from just a dozen or so ultra wealthy families, right? And so that tax grab, they said to people, don't worry, we're just going after the money of like a dozen or so ultra wealthy families. And a few decades later, that same tax policy was grabbing money from millions of middle class Americans. And that is always what happens. They always promise you, don't worry, we're only going to go after the ultra wealthy. And then it's, well, the wealthy, well, these people, well, and guess what? The ultra wealthy don't have enough money. If you think it's just going to be them, you're foolish. They are coming after you. If you are listening to this, they are coming after you. That asset confiscation will not be limited to people who have a net worth of $100 million. And even if you're thinking, okay, fine, cut it 100 times. My net worth isn't $1 million. I'm safe. You're not safe. I assure you, they are coming for every one of you. They didn't hire 80,000 new IRS agents so that they could go after, the few hundred or few thousand families with a net worth of over $100 million. They don't need 80,000 IRS agents to go after people who have a 9-figure net worth. They are coming for you. So let's talk about what would happen in these policies. Let's imagine for a minute that you own 1,000 shares of your favorite stock. It could be something like GameStop, right? You guys love GameStop, right? So maybe you own 1,000 shares of GameStop. And, Roaring Kitty comes out and he says, hey, everyone, I think GameStop's going to be up. It's going to be up huge. We're all in great shape. But you already own your 1,000 shares and that stock goes to the moon, right? That's the expression. And all of a sudden, you're sitting on huge gains. And that's terrific. You don't have cash. You have that 1,000 shares in your brokerage account. And then you get to year end or April 15th, and the government says, well, you're sitting on a lot of gains in GameStop. Why don't you pay us? The only thing is your money's invested and you don't have the cash from GameStop. You're holding this, right? You're holding it and you're going to hold it until that stock goes to the moon. Well, guess what? There's only one way you're going to be able to pay the government bill. You have to start selling your GameStop stock and then hand over the proceeds to the government. And so in this hypothetical example, maybe you go into the next year and you own 700 or 800 shares. Now, you don't have any cash in your pocket. You just handed the government the proceeds from your shares. And then, Roaring Kitty comes out and says something else and GameStop goes up again. Well, guess what? The next year, you're going to have to sell more of that stock to pay the government bill. And now maybe you have 500 or 600 shares in your account. You don't have any more cash. You've just been paying the government on unrealized gains. Now, if this sounds like asset seizure, that's because it is asset seizure. This is 100% wrong, making people who haven't realized gains pay taxes on these unrealized gains. And by the way, Rob, here's where it gets even worse, because it does get even worse. Stocks like GameStop have been volatile. So what if, the stock goes up and your 1,000 shares is worth a lot of money and you've got to sell a bunch of shares. And now, say you have 700 shares in your account because you had to sell 300 shares to pay the government. Now, let's say things don't go well, right? GameStop has been volatile and, they shut off the buy button or something else again. And the price of GameStop stock comes down. Is the government going to send you your stock back? Are they going to refund you? Right? No. What you have then is an unrealized capital loss. Now, I have no idea what the tax treatment of unrealized capital losses will be, or if they're even thinking of giving you a credit for it. But I can tell you with realized losses, if you don't recognize that loss in the year that it's taken and they separate your losses into long-term and short-term, so you might have short-term losses and long-term gains, guess what? You pay capital gains taxes on your long-term gains, but those short-term losses get carried forward. And you're like, okay, what's the big deal? Well, the big deal is you can only apply about $3,000 of that in each year. And so, good luck getting your money back. You can be in a situation where you have to sell your stock in order to pay the government, but then you could take a loss on it later. Is the government going to send your stock back? Are they going to send your money back? Don't count on it. I wouldn't bet on that. So, one, it's not just the ultra wealthy. If you're listening to this, they're coming for you. Two, this is asset confiscation, and you can easily end up in a situation where you're handing the government gains on cash that you don't have. You have a smaller position, and then you could potentially have unrealized losses. They're not going to pay you for that. Rob, this is a disaster. It is theft.
Gary, with the price control measures, there's talk about it being aimed at preventing, perceived price gouging as well. I think this is where you're going to get into the Venezuela piece of the conversation.
Yeah. So one of the things that people don't like, and I understand why they don't like it, is when we have shortages and prices go up, people say, oh, this is bad. People are, they're profiteering, they're making money off of an emergency. This should be illegal. And the problem is every time people try to implement price controls, you end up with shortages. Without an incentive to produce, people won't produce, and you end up with shortages. Without an incentive to stock merchandise where they could be losing money, retailers won't stock that merchandise. And so you just end up with shortages. Now, we saw this in Venezuela where they had horrible inflation. Sound familiar? Then they started talking about price controls. Sound familiar? And they did it on food. Sound familiar? Because right now politicians are talking about taxing excess gains and trying on food. And I want to get to how crazy that is in a minute. But Venezuela did exactly that. And guess what, Rob? They ended up with a starvation situation. Venezuelans couldn't get enough food. And the few Venezuelans who could get food, because they didn't want to sell that food at the discounted official price, even though Venezuela was starving, they shipped the food out. They sent it to neighboring countries where they could get full price for it. This is just a disaster. You end up with a disaster everywhere all the time. And food in particular is a dangerous way to do this. Lynn Alden put out a great chart on this, showing Kroger profit margins. And, if we go back about 10 years ago, their profit margins were about where they are right now, which is about 1.4%. So first, let's talk about how little 1.4% is. Imagine for a minute that somebody goes into a supermarket and they say, wow, everything's really expensive. And by the way, things are expensive. I saw an $8 gallon of milk the other day, which is shocking, right? An $8 gallon of milk. But say somebody says, wow, this is just too expensive. I can't afford this. They steal a $10 item. And let's not even criticize that person. Let's just say, okay, we understand that what they did was wrong, but they were hungry. Then, okay, I got it. They steal a $10 item. Rob, with Kroger's 1.4% profit margin, that means the supermarket has to sell $700 of groceries to make up for that one theft. And so people are saying these companies are price gouging. They're not price gouging. Their margins haven't gone up. Their margins have been roughly stable. They've actually come down since COVID started. The fact is the price of food is going up. And part of that is because the current administration is waging a war on energy. And you would not believe how much energy, and diesel fuel in particular, that's required to farm. And we have all of these water use regulations. Okay, I get it. Nobody wants to be, in a situation where we have a polluted water supply. Understood. But all of these regulations that we have in the United States are making food more expensive. And we've done some really unwise things in terms of killing chickens who were healthy, but one of the chickens in the flock had come down with a virus, and we've just done everything with a sledgehammer instead of a scalpel. And so we do have higher food prices, but the retailers aren't gouging. So everyone who thinks, hey, I don't like my grocery bill, we can force Kroger or Safeway or Albertsons to sell to us at a discount. That's not what's going to happen. These companies have a 1.4% profit margin. And so here's what's going to happen. The government's going to say, you can't sell item X for more than this price. And if that is below the cost that the supermarket has, they won't carry that item. So you're going to end up in a situation where not where you get all the food you want at the price you want. You're going to end up in a situation where you have empty supermarket shelves. And the only thing worse than paying a lot for groceries is not being able to find groceries. This is Rob, we talk a lot, and I'm passionate about this because this is a disaster. We talk a lot about the bad economic decisions made in Washington and the toll it's taking on the American people. And we discuss that a lot. This policy leads to a humanitarian disaster. This policy leads to hungry people. And you know what? The thing that's worse than inflation is not having enough to eat. This is a disaster.
Gary, the profit margin, right? Everyone on the other side of the aisle, they, at least, or a few I've had conversations with, will come back with, seems like quite often, but the CEO of Kroger makes X amount, right? And these executives make X amount. How do you bridge that gap with someone that's using that as their rationale and argument for these companies are price gouging, even though based on that 1.43% profit margin, they clearly are not?
Yeah. So if so, I don't actually know how much the CEO of Kroger makes, nor do I know off the top of my head, what Kroger's revenue was, and we'd have to compare it. But what I can tell you is, even if we cut the pay of Kroger's CEO by 90%, it's not going to change the price of milk and eggs. It's not enough in the grand scheme of things. And if you want to argue that these executives are overpaid, hey, fair enough. That's great. But the issue with being the CEO of a company is theoretically you have to face your shareholders. You have to be able to deliver value. And a CEO who can deliver a lot of shareholder value, and by the way, the best way to deliver shareholder value is to produce a great product at a good price or sell good products at a great price, right? I mean, whatever your retail strategy is, the only way you're going to be able to create shareholder value is by creating value for your customers and by creating a good shopping experience for your customers. And by experience, we could talk about the quality of products you have, the variety of products you have, the ability to source rare products, and price. That is part of it. And so this all gets wrapped up in one thing. But The truth is, a CEO can create a lot of shareholder value by creating value for their customers is worth what they get paid. And firing that person and hiring somebody at half that price, you could do that, but it could still make things worse. But either way, the CEO of Kroger is not making enough money where we can cut his pay and you're going to get milk and eggs at a better price. It just doesn't work that way. Rob, I understand the value of that argument because it's emotional,
Mhm.
right? It says, hey, there are rich people involved here and there are poor people who are trying to buy food and therefore they're connected.
Right.
Except they're not connected and the word therefore needs to be taken out of the sentence and it just doesn't work that way. And so I understand, the attractiveness of making an emotional argument. We don't do that here at Deep Knowledge Investing. I understand there are people who will like what we say and people who won't like what we say and people who agree or disagree. But, we need to deal with this stuff in a rational world. We don't believe in making emotional arguments. And I think those arguments they're cheap. I understand it's a huge problem when people can't afford food. The answer to that is cut spending in Washington. That will reduce inflation. The answer to that is cut regulations in Washington. Give our small farmers the
Yep.
ability to farm without so much government oversight and without so much government expense of dealing with government regulations. And we'll end up with a less expensive lives and less expensive food. One of the issues we have, our currency is being debased, and that's just a fancy way of saying the purchasing power of your dollar is going down. Cut spending in Washington. That will fix it. Fixating on, the compensation of a few wealthy employees. I get that that sounds really good in front of a TV camera. It's good if you want to rile up a crowd, but if you want to deal with how things really work and fix the problem, that doesn't fix anything. That's just a cheap way to win applause lines from people who don't understand economics.
Moving to the Fed, Gary. Fed's going to cut. We have that coming up in September. Inflation is not defeated. And so, predictably, gold hits a new dollar price record. Thing number 4, Gary, gold passes $2,500.
So, Rob, one of my favorite points we were talking about last week is, that question of, did the Fed defeat inflation? The answer is no. No, the CPI, which is understated, is still right around 3%. If you're aiming for 2%, which is 2% too high, you're not close yet. They have not defeated inflation, and the CPI is understated. Anybody watching this, you tell me if your cost of living in the last year is up only 3% or was up more than 3%. I will bet anything that many more of you are experiencing more than 3% inflation. So the Fed has not beaten inflation. They're about to reduce interest rates. They're going to do that next month. And when that happens, the yield on the dollar goes down, which makes the dollar less attractive relative to other assets that don't produce income, gold. And the other thing is when you cut the Fed funds rate, when you cut interest rates, that increases inflation, which is a fancy way of saying it means you're going to have a future loss of purchasing power. Well, when you have a future loss of purchasing power in the dollar, hard assets, which can't be reproduced easily, like gold, go up. And so, last week we got a new high in gold, passing the $2,500 benchmark. One thing that did grab some attention, the 400-ounce gold bar, the ones you see in every spy movie, right? When they do the James Bond films where they're going to rob Fort
Italian
Knox.
job is my favorite.
Yeah, there you go. Right. Those bars that you see in the Italian Job, great. I'm a fan of heist films. Those are now worth more than $1 million. So we do not advise pulling a heist or robbing anybody or anything, but now the value of the bars.
Gary, you've talked about hedging portfolio for quite some time. Obviously, DKI hedged with gold and Bitcoin. My question is actually, how do you determine between the two? I know you're obviously fond of both. Let's say the guys that are holding gold compared to Bitcoin and vice versa. You make an argument for both.
Oh yeah. I own both personally. I bought similar size positions, and I've done really well in gold. DKI subscribers have done really well in gold. We have great profits in that name. And so that position has grown and I haven't sold any of it. On the Bitcoin side, I bought a similar size position, but that was with Bitcoin around 15,000. And so that's gone stratospheric. And, we've made 4 or 5 times our money on that. And it's become a much larger position. I now have a huge Bitcoin position, and that's fine. It is a massive upside. Um, the reason I like owning both is gold is that traditional hedge against inflation. It is the thing that for thousands of years has held value when the value of fiat currencies fall. And we've looked at the research on this. Throughout history, there have been 775 fiat currencies. That's just a fancy way of saying a government-sponsored currency. Examples would be the dollar, the yen, the pound sterling, the euro. Those are all, the Mexican peso. Those are all examples of fiat currencies. Throughout history, there have been 775 of them. They have all failed. They've all gone to zero under massive amounts of debt and debasement. If that sounds familiar, that's right. That's where we are now. And so that's why you'd want to own gold. Bitcoin, I think, is a phenomenal solution to that. Having something that's decentralized, something where you can move assets across borders seamlessly, where you can export it in your head. If you can remember your 24 seed words, you don't need to physically transport it, and you can send it anywhere at any time. That to me is a phenomenal solution. Bitcoin, as of the last halving, is now harder than gold. That means that that gold, you typically have every year about a 1.5% increase in supply. Bitcoin, it's now less than that. It's now harder than gold. So I like both. I like owning both. The other thing that I would advise for people is, we talked about this last week on this show. We've seen situations where when the markets go crazy, the systems fail and shut down, and you can be locked out of your account and not be able to trade it. And the government can confiscate. We've seen situations even in Europe where banks have had bail-ins. They've just told their depositors, yeah, congratulations, you now own part of a bank. And the cash you had in your account, we're writing that down. You don't have $1,000, you have $400. We might let you take it out. These things happen. And if you think it couldn't happen here, it can. It happens everywhere. It's happened everywhere. This kind of confiscation, we were just talking about asset confiscation. The government will find all kinds of ways to do this. So we advise to people, have some money outside of the financial system. Have money that people can't confiscate, whether it's gold coins or Bitcoin. If you're going to own Bitcoin, and I think you should, please self-custody. If you don't know how, send us a note, ir@deepknowledgeinvesting.com. We've written a guide. We have a simple, easy guide that you can use to understand how to self-custody. It is very easy to follow. Simply, literally click here, fill out this, push this button, and it works. But, I tell everybody, have some money outside the financial system. If the system fails, you want to have something.
Gary, wrapping up for today, we're talking Target, or Target, as some like to call it, ticker TGT. They beat revenue estimates, but the story somehow lower prices despite gross margin gains, and future growth guidance is quietly lowered. Gary, thing number 5, Target results, you're saying misinterpreted.
Yeah. So, Rob, I know we always have like the takeaway question. I'm just going to cut right through and get to the end on this. One of the things that is endlessly entertaining doing what I do is seeing the bad takes in the media. Often these stories get sent around that allow people to understand what happened, except they're written often by people who have no idea what happened. And so the story in the media last week was Target beat their revenue estimates by lowering prices. And, somebody said, hey, they lowered prices on 5,000 items and, they got more sales as a result. And that would make sense, except here's the problem with that analysis, rather. Target's gross margins went up. Their prices weren't down overall. Their average price was up. they're making more money on slightly more sales, which is not a bad thing for Target, but it means the analysis is wrong. They didn't lower prices. Yeah, they lowered prices on some items, but overall,
Right.
their gross margins were up. The other thing is, people were celebrating this big win, except somehow everybody forgot that a year ago, Target got themselves mired in a really contentious social issue. It's one we're not going to discuss here. But they were subjected to a boycott for people who were angry about the way Target handled this stuff. And so, that made the comparison for this year look easier. Just to give you a sense of how not great Target's results were, second quarter revenue this year was below the 2022 level. So you go back 2 years, their revenue is down. So this whole, they cut prices and increased their sales. No. Overall, they raised prices and their sales are down from where they were 2 years ago. They had an easy comparison from last year. Finally, the last point I'd make on this is Target's official guidance had been 0 to 2%. That's for revenue increase for the year. And, I took a look. The press release said, but now we're guiding people to the lower half of that range. So it's a really tricky way of doing things, right? So what does that mean? That means they took their guidance from a range of 0 to 2% growth to 0 to 1% growth. They cut their guidance in half. But because they kept the guidance the same, and said, well, we're at the lower end of the range. Instead of just lowering the range, people are like, oh, great, everything's fine. I assure you, when a company cuts their growth guidance in half, everything is not fine. It's also worth pointing out that 0 to 1% revenue growth that they're targeting, that is below the current inflation rate of 2.9%. I don't believe that 2.9% is correct. But the point is, Target is actually selling fewer goods for higher prices. Now, you can think that's a good thing. You can think that's a bad thing. My point is the media got this wrong. The headlines were wrong. The analysis was wrong. And this is how you take this stuff apart. And people often ask me, Rob, they often ask, how do you find your next idea? Like, how do you know what to look for? And my answer is I look for situations where the dominant narrative in a stock is incorrect. Now, I'm not invested in Target. I don't have a position. I'm not really interested in the company. I think they've got problems and I just, that's not the sandbox I want to play in. But the point of all this is these are the kinds of things I look for when everybody is convinced that something's true and they're all misinterpreting it and where the dominant narrative and the headlines are all wrong. These are situations, not Target specifically, but these are the kinds of things that I look at to find my next idea, to find ways of making money.
Yeah, I think you covered most of it there, Gary, but just again, another example of that bifurcation in the economy, talking about inflation boosting that dollar denominated earnings. Gary, that wraps up this week's 5 things. Any closing thoughts from you on any of the points or any other takeaways?
Well, as a couple things. One, super excited about this new idea. DKI subscribers are already profitable in the name, but like I said, if you're interested, you didn't miss it. I think there's going to be more to come in that. Second round of applause again for interns Andrew and Alex. They did the heavy lifting on this. What you're seeing here is it represents a huge amount of time and effort from them. It's a lot of work and creativity and thinking and organization from them. Um, Rob, we get a lot of talk these days about, how young people in this generation, they're lazy, they're dumb, they're entitled, they don't know what's going on. I hear that all the time. But, I work with these guys on a daily basis, on a weekly basis, and the level of intellect and understanding and effort and work ethic I see from them, I think is just first rate. Um, we've got some good ones around here. Finally, for the people watching this again, we've added a lot of subscribers the last few weeks. Views are up, watch time is up. Your time is valuable. Thank you for spending it with us. I really appreciate it. It means a lot to me. And then finally, in recognition of it's going to be a light news week because of the holiday, a lot of people are already taking off for vacation. We are not going to produce a version of the 5 things for next week. There's just not that much going on. Obviously, for those of you who are curious, the big events for this week, NVIDIA earnings on Wednesday. That's going to move the market. But, by the time we're talking about it next Monday, that'll be stale. The PCE, Personal Consumption Expenditures Index, that's going to be reported, I think, on Friday. It is an important inflation index. It is the preferred inflation index of the Federal Reserve. But that said, unless that number is way out of expectations, and I don't think it will be, the conclusion is going to be the same. We're looking for a 25 basis point rate cut in September. So, that's sort of what's coming up. But when you don't hear from us next week, nothing went wrong. We just, quiet news week, and we're going to give Andrew and Alex an easy week and hopefully a fun holiday weekend. Those guys work really hard. They deserve it. So again, for everyone, thanks for tuning in, and we will see you not next week, but in 2 weeks. We'll be back with, a new and improved 5 things for you.
Thanks, everyone.